Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Alec Canal. Let's get to the 3 things you need to know today. First up, watching shares of Nvidia waver this morning after data center revenue came in just shy of analyst expectations. However, its second quarter earnings did beat on both the top and bottom lines. The data center revenue signaling that growth is decelerating after a staggering 2-year boom in artificial intelligence spending.
Incredible. We had a record quarter without China, and we just guided another record quarter without China. It's incredible growth. If you look at the AI native companies, last year they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion, 10-fold increase in 1 year. And that's just the tip of the iceberg.
Difficulties in China have also clouded Nvidia's business. Though the Trump administration recently eased curbs on exports of some AI chips to that country, the reprieve hasn't yet translated into a rebound in revenue. Plus, U.S. stocks steady after Nvidia's results slightly disappointed. Investors now eyeing economic data as the next potential catalyst for stocks. Revised second quarter GDP data this morning coming in higher than the previous read at 3.3%. Next up, PCE data tomorrow and the U.S. jobs report next week. And Mexico is set to raise tariffs on China amid a push by the U.S. Bloomberg News reporting the Mexican government plans to increase tariffs on China as part of its 2026 budget proposal next month. The tariff hikes expected for imports including cars, textiles, and plastics aim to shelter domestic manufacturers from subsidized Chinese competition. Let's get a check in on stock futures. You're seeing green across the screen here after the S&P 500 hit yet another record high. Futures all trading higher this morning. You're seeing the gains led by the Dow, I believe. Yes, up around 55 points. S&P higher, NASDAQ higher. Of course, investors continuing to digest that Nvidia earnings report. And we did see positive economic data earlier this morning with that GDP revision higher than the previous estimate. We're now at 3.3%. The prior estimate was 3.0%, and economists were expecting 3.1%. So just a beat across the board here when we talk about GDP. But let's dig into the top story of the day, Nvidia. The stock wavering after data center revenue fell short of expectations. Still, the company topped estimates on both the top and bottom line in the second quarter, with revenue up 56% year over year. The chipmaker also issuing strong guidance for the current quarter, even without including H20 shipments to China. Here's what CEO Jensen Huang told Yahoo Finance about that when asked what the underlying data center demand meant. Take a listen.
Incredible. We had a record quarter without China, and we just guided another record quarter without China. It's incredible growth. If you look at the AI native companies, last year they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion, 10-fold increase in 1 year. And that's just the tip of the iceberg.
Joining me now, Yahoo Finance tech editor Dan Howley and John Belton, Gabelli Funds portfolio manager. Dan, you spoke with CEO Jensen Huang following that earnings call. What are your biggest takeaways from the conversation?
Honestly, no fear really on the China business or any kind of slowdown in AI more broadly. The China business was not part of Q2 earnings, not part of Q3 forecasts, but it seemed as though that was kind of if it happens, then great. He basically had told us that the U.S. needs to be a part of the Chinese market, that just as the U.S. dollar is a global currency standard, that the U.S. tech should be the global tech standard. But that they're working with the Trump administration, they've worked with them, and that they're basically ready to go. It just seems as though it's the China side that's holding things up at this point. But he pointed out that they continue to see growth across the board. And if China was involved, it would be about 2 to 5 billion in revenue. If not, really no big deal.
Now, John, you just heard Dan break down some of the takeaways here. I'm looking at shares trading pretty much flat to the downside right now in early pre-market trading. What is your reaction to how investors are interpreting this latest report?
I think there was just clearly very high expectations. That's nothing new for Nvidia. Stock being down the day after earnings, also nothing new for Nvidia. I think this will make it, assuming it does open down for the last 5 earnings, that it's opened down. Stock's done just fine all throughout. So, I mean, to Dan's points, all the long-term growth drivers remain very much intact. I think this China focus is a little bit silly and it's very short term. And yes, it creates very marginal impacts on July quarter numbers and on October quarter guidance, but the direction of travel in China is positive. They will be participating in the market. I think the US administration has made that clear. Nothing really changes with that story.
Does Nvidia need China in order to really support further growth?
Well, I think China is a big market. I think Jensen Huang has suggested could be a $50 billion annualized revenue opportunity for them. So that's definitely, a big opportunity. I think it's very much nice to have. I think it's good for the US if Nvidia is allowed to play in China, which again, I think they will be allowed to play. The dynamics this quarter, I think one of the reasons they didn't beat by more in the July quarter is they had no sales of H20s to Chinese customers. That was a little unexpected. People thought they'd be able to generate some revenues towards the tail end of the quarter after they got the export licenses reinstated. And then on the guide, it was nice that they sized a $2 to $5 billion potential tailwind if they are able to sell existing inventory. So I think you plug that in, that would suggest if that does play out, there would have been big upside to street numbers in the guide as well. But now there's headlines this morning suggesting that they're in discussions with the US about a new China compliant Blackwell product, which would be a bigger opportunity than the H20 to begin with. So I think China is a big opportunity. It's a market they will be able to play in. All the steps are happening as they should, and the expectations miss is just a little bit short term and not something I'm hugely focused on.
And Dan, this is something that you asked CEO Jensen Huang whether China was a want or a need, and he really did seem to double down on the importance of that market. When you look and think back on his tone and how he talked about China, how do you view that as a pillar for this company ahead?
Yeah, I mean, look, this is something that Jensen's been talking about for, since the Biden administration, that the U.S. can't just kind of abdicate its leading role in AI to anyone else. And so that includes working and selling its products in China. That total addressable market being $50 billion. Jensen said that could increase by 50% next year and so on and so forth. He did seem as though, just as he's been before, to hammer home the point that the U.S. needs to be there to have its foot in the door. Because if it doesn't, it gets into this idea that we've seen before of kind of a bifurcated, we previously saw the idea of a bifurcated internet, US-China internet. It would be the same thing with AI, US AI, China AI, and then everybody has to pick between the two. Jensen's view is, why not just have US dominate and then everybody just picks US? And so he seems bullish on that idea. It just needs to kind of get China, at this point, it seems, to play along.
Mm-hmm. Now, outside of the China story, we did see that data center miss, which was surprising to many on Wall Street, considering how strong the demand was from the hyperscalers this earnings season. So, John, do you see this as just noise to this hyper growth story, or is it a signal that maybe the AI boom isn't as aggressive as it was, say, 2 years ago?
Well, did they really miss, though? I think the miss was actually China in the quarter. I think the number was still very strong. Similar to the guidance, very strong, even without China. So I'm not sure I buy that they really missed on the data center line. And really all we're here, they dropped a couple really interesting nuggets on the call about the data center line. They're targeting $20 billion of sovereign AI revenue this year. That's a new target. That's double the $10 billion target they put out for last year. So that's clearly on a good track. They also disclosed that H100 and H200 revenues grew sequentially in the quarter, which is really interesting. It means, I think, that Hopper did better than expected. That implies maybe Blackwell did worse than expected. There's no question about Blackwell demand. So I think that's more of a supply dynamic where maybe some of the rack manufacturers in Asia are still having a little bit of difficulty cranking out product. But I think that is a situation that will resolve itself. So no, I don't really think the story has changed at all on the data center line moving forward.
And to that point, high expectations, obviously, on the part of investors. And we were just seeing that chart where you can see the massive growth for data center revenue. And Dan, I believe you said yesterday, it's pretty much a law of numbers at that point. But John, lastly here, we did hear that $60 billion buyback authorization. How much of a catalyst do you think that is for the stock? And do you view this move to the downside today as a buy the dip opportunity?
So the buyback, it's not negative. But I don't think it's much of a catalyst. Unfortunately, $60 billion in the context of a company with a $4 trillion market cap just doesn't move the needle. So yeah, not really much of a change in story there. And then the second question, is this a buy the dip opportunity? I still think this is a growth story that's in early innings. I'm not much of a trader of Nvidia stock. I've owned it for many years and generally just buy and hold the position. So I think most of what I saw last night is thesis affirming and still feel very good about the story.
All right. John, Dan, thanks so much. Appreciate it. Coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We're watching Snowflake, Buffett's latest buy, and Best Buy. First up, Snowflake. Shares jumping this morning after the company delivered a strong outlook that offset concerns of new AI players taking business from incumbent software companies. While Snowflake had escaped much of this worry because its platform works with a variety of new AI models, it had suffered with the rest of the industry recently. Snowflake shares have gained nearly 30% this year through Wednesday's close, outpacing most software peers. Next, looking at two Japanese trading houses as Warren Buffett boosts his stake in the firms. Overall, Buffett's company has holdings in Japan's 5 biggest trading firms. The legendary investor first revealed he had stakes in the trading houses in 2020. The conglomerates have benefited from his interest and have also sharpened their focus on shareholder returns and balancing their portfolios to cut exposure to volatile sectors like natural resources. Finally, Best Buy. The electronic retailer surpassed Wall Street revenue and earnings expectations for its most recent quarter on Thursday, but it did stick with its full-year forecast, citing tariff uncertainty. The company's CFO said given the uncertainty of potential tariff impacts in the back half of this year, they feel it is prudent to maintain annual guidance. Best Buy's product lineup, which ranges from appliances to laptops, makes the company particularly vulnerable to higher levies on China and other supplier nations. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Now that Nvidia's earnings are out, investors await the next big market-moving catalyst. The Fed September meeting is just weeks away, with investors pricing in a quarter-point cut. The latest GDP revision shows the U.S. economy grew more than expected in the second quarter, and the Fed's preferred inflation measure, the PCE index, is out Friday. Still with me, John Belton, Gabelli Funds Portfolio Manager. And John, for weeks, we've heard how important Nvidia's earnings would be for this market. Now that that's in the rear view, what are you watching for next?
Well, I think next week we're kind of back to a big week of macro data. We've had a couple quieter weeks on that front towards the tail end of August, but next week we'll get the August non-farm payrolls report on Friday, of course, and before that, a couple other labor data releases, including the JOLTS report and the Challenger job cuts. So I think we're, if we rewind back to a month ago, which now feels like an eternity ago, really soft payrolls report, I think drove some a resurfacing in fears of an economic slowdown. So we're going to learn a lot more about how the economy is progressing in this tariff environment as tariffs start to take hold and impact, corporate profit margins.
And as we reflect on these Nvidia earnings, did it change the needle at all about what's moving markets higher as stocks continue to trade at these record highs, or did it only add to this bullish optimism?
Well, I think Nvidia is similar to a lot of the mega cap tech earnings over the last cycle. Really strong numbers, should see some positive earnings estimate revisions, really robust earnings growth. Fundamentals, I would say, for these large tech companies, still really justifying and supporting such strong stock performance. Valuations for this group at the surface level don't really give me that much cause for concern, so long as fundamentals can remain strong and growth can remain strong. And so a lot of that's going to depend case by case. Different companies have exposures to different pockets of the economy, but a lot of this is going to depend on how resilient the consumer is, how resilient the labor market is, things like that.
So do you think that these high tech valuations can offset some of the concerns that we have on the inflation side, on the job side? There's been more chatter about stagflation. How do you view the cross currents that are happening across the economy with where we're at in the stock market?
It's a very complicated environment because I think on the inflation side, the data has been more mixed recently. You had a really dovish CPI print last month, but then a concerning PPI print, and overall PCE kind of comes out more or less in line with expectations. But I think going into these prints, we know that there's going to be some noise in the data over the coming months because of tariffs. And the question is, as companies respond to tariffs and in many cases raise prices, do these higher prices stick? Do they represent a potential trigger for inflation, or are these just more one-time step-ups in price? And if it's the former, that's a concern. I think that ties the central bank's hands. And to the earlier part of your question on valuations, if we're not going to go into more of a monetary easing cycle, then yes, valuations become harder to defend in an environment where interest rates are still relatively high, or still above neutral, I should say. But yeah, again, the only other point I'd make, though, high tech valuations, I'm just not sure I see current valuations for tech as really much screening too or particularly high, or as representing too much risk given the fundamentals of these companies.
And that is something that we've been hearing across the board from analysts. But given a lot of the questions that you just laid out, it is interesting to see markets have so much conviction in that September cut, especially since we still have a heck of a lot of data to get through before that point. So what could derail that in your view? And how would markets react if we didn't see a cut in September?
Well, I think the market's already looking past September. And I think what we heard from Powell last week at Jackson Hole, in my opinion, was they are prepared to move in September, but beyond September becomes, you go back to data dependency. You go back to meeting by meeting. You go back to analyzing each data release as it comes in. And so the path for rates probably biased lower beyond September. But the cadence of that is still very uncertain. So I think that becomes, that's why this upcoming slew of labor market data next week becomes very important.
So given that uncertainty, as a portfolio manager, how do you balance some of that risk? Do you get more defensive, or are you still very much risk on?
No, I think you try to stick to fundamentals, stick to companies that have momentum behind their fundamentals. And you look for situations where earnings estimates are being revised higher, and that kind of with the monetary policy backdrop, you're probably in an environment where rates can be on the margins a little more supportive of valuations, but not drastically so. And on the flip side, fundamentals in the economy, there's probably more downside risk than upside risk. So it feels like more of a late cycle backdrop on the margins, but still a lot of opportunities to invest in companies with good fundamentals.
All right, John, I appreciate your insights. Thanks for joining.
Thank you.
Coming up on Yahoo Finance, opening bid, our own executive editor, Brian Sazzi, joins us now. Brian, what's coming up on the show? We have Nvidia Day 2.
I am fired up, Allie. We're going to dig into all things Nvidia. I have my Nvidia green on. Jensen Huang had his trademark leather coat on. Yahoo Finance last night. We're going to dig back into that interview, talk about China sales, talk about data sales, and the outlook for this stock.
All right, looking forward to that. And that does it for Morning Brief. Much more ahead on Yahoo Finance. Stay tuned. Federal Reserve Governor Lisa Cook filed a lawsuit challenging President Donald Trump's attempt to fire her over her claims she lied on mortgage applications. Cook filed the suit Thursday in federal court in Washington, kicking off a historic fight over independence of the U.S. central bank. Cook sued days after Trump wrote a letter to her, which he posted on social media, saying that he was removing her from her post immediately in light of her, quote, deceitful and potentially criminal conduct in a financial matter. Cook has not been formally investigated or charged with any wrongdoing. The lawsuit is a major escalation of the growing clash between the White House and the Fed, which has resisted Trump's demands to lower interest rates, even as Trump has repeatedly attacked Jerome Powell. The Fed chair has also resisted the president's demands to resign. Rulings in the case in the coming days and weeks could add to investor concerns that the president's efforts will undermine the independence of the central bank. Bloomberg reporting the White House did not respond yet to a request for comment.